This is Type A Universal Life issued to age 50. Face is 100,000. Premium is 15,000. The year 1 corridor factor is 2.2. Credited interest is 5%. The corridor exists so Universal Life stays an insurance product. The insurance benefit must stay significant versus a pure investment. Universal Life is regulated as insurance, and the corridor keeps the death benefit large versus the account value. This is Type A, not Type B. Additional death benefit is face minus account value. The face stays level unless the corridor binds. Net amount at risk depends on the account value. With no corridor, net amount at risk is 100,000 minus 15,468.6, which is 84,531.4. Times Q of 0.00139662 is 118.02. The pre-cost of insurance account value is 15,000 times 0.99 times 1.05, which is 15,592.5. Corridor-only cost of insurance is 26.07. Take the maximum, 118.02. The no corridor figure binds. End of year 1, Type A account value is 15,486.6. Additional death benefit is 100,000 minus that, 84,513.4. Cash value subtracts 5% of the 15,000 premium, so 14,736.6. The No-Lapse guarantee provides term insurance of 100,000 until age 90. Value it on the SOLT at 5% with no expenses. Year 20 account value is 20,000. At the end of year 20, the insured is age 70, so 20 years of term remain. The expected present value of 100,000 of 20-year term on age 70 is 29,778. This is still Type A. The No-Lapse guarantee is a term overlay. It does not turn the contract into Type B. Hold a reserve because 29,778 exceeds the 20,000 account value. The No-Lapse guarantee reserve is 9,778.